Good morning. It's Friday, July 18th. So we got a lot of green on the screen here. We got US equities, also the metals, the energies, and the cryptocurrencies are all green here. And this comes after a significant announcement. So one thing I was reading last night was that President Donald Trump is planning to issue an executive order that will allow cryptocurrencies to be included in U.S. retirement plans. So what happened was the executive order is expected to be signed next week, and this comes with the Financial Times allowing 401k plans to diversify their investments beyond those traditional stocks and bonds. So the proposed investment span had a wide range of asset classes, including cryptocurrencies, precious metals, a lot of private equity, things like that. So infrastructure deals. So that's why we're seeing some optimism in a lot of these markets spill over from the European session with that type of report being put out. So let's get into it here. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So stock futures, they are looking to end this week on a positive note, with traders feeling a bit optimistic about earnings and also the economy. Also hopes that the Federal Reserve will finally cut interest rates, possibly at that next meeting, comes from Governor Waller. He'll be speaking again at 7 a.m. Central Time. So we'll see what happens there, and we'll see. He's going to cite that basically the deteriorating labor data should be the catalyst for the Fed to cut rates, although Jerome Powell has really had this hard stance here and is going to continue to wait for the data to present itself. His replacement, well, we saw that kind of rhetoric, what it did to the markets here earlier in the week, with that volatility really coming out on Wednesday about midway through the session here. So you look at the S&P 500, 63.41, about unchanged on the day, was up at 63.57, 63.38 being the low. Really needs to hold the like 30 to 20 level, get a bounce off of that level there in order to push up to the 6,400. Any kind of break would probably take us back down to 63.05. Break below 6,300 would probably be a washout down to 62.80. So a lot of these different types of levels here, I kind of measure a map. On more intraday basis, I'll look at your 15 minute, your 30-minute charts. I'll also look at your daily charts, and I kind of back that up as I'm kind of lay out levels for more tactical trading, as a lot of clients do intraday trading with myself in the US equity markets here. So looking at some other things that came out here, we did have Netflix results after the bell. They beat expectations on almost every major metric, but the stock is down about 1.7% in the pre-market. And if you look at the April lows until where we're at yesterday, I mean, that stock had risen 50%. So for it to pull back, that's quite acceptable given the run-up that we've seen here. So on the crypto front, one report that I also read every about Thursday night, Friday morning here is going to be the Bank of America, the flows data, which shows that where investors are pouring in their money. And for weeks and weeks, it was the NASDAQ, it was the gold market, it was, fixed income when we're going into problematic periods of time, or the volatility index in these markets. And where they're pouring their money into, well, it's going to be crypto funds right now and different crypto related asset classes here. And it is a big boost here. And the last time we saw this kind of boost was right around November, when President Donald Trump was being elected. We saw that Bitcoin start to move up. We saw betting markets predict that Trump would take the office. And then what happened? Bitcoin futures took off from there, and also your other cryptocurrencies. Now, when the rug pull occurred with the crypto markets was when we went into DEFCON right around April, and we went in that deflationary spiral here, and that really just gloom and doom type event. So it shows you that, these different asset classes, they're not insulated for all different economic regimes. So you got to be aware of that. And then secondly, look at what led us out of those April lows. And it was Bitcoin that took off to the upside. That was the first one, the leader of that. And then finally, the NASDAQ took off beyond that. And then all asset classes, as the tide lifted, it lifted all boats along with it. So we want to look at some of the other developments as well in the cryptocurrencies. So Congress, they did pass that long-awaited stablecoin bill, clearing the way for broader use of crypto in everyday finance. The interesting thing about stable coins is that I really believe that they're just a protest of U.S. Treasuries, because what's happening is a company XYZ launches a stable coin, people invest in the stable coin. What does XYZ company do? Well, it's got to be stable. They go into treasury related products, and then they charge a haircut. So one thing to note about stable coins is that as the Fed cuts rates, the value of these stable coins or the returns on them should come down as well. So that's just my opinion. I'm entitled to my opinion. So right or wrong, it is what it is. So that's the way that I see it here. So Some other news here, we expect to see much more tariff deals and things like that. And that's what traders are not focused on here at the moment. And those should come over the weekend here. And with the coming weeks leading into that August 1st deadline, you're going to see a lot of tariff talk here. So over the weekend, we expect to see Thailand try and cut a deal here and to reduce that deal closer to what their other close allies and partners are in that region. South Africa also hopes to have an agreement with the G20 here. Also, Taiwan is supposed to have an agreement. Indonesia, they're proposing that the U.S. exempt the exports of strategic commodities, including palm oil, nickel, rubber, and cocoa, over to the U.S. to be exempt from those types of tariffs. So you want to look at that. And that type of news here, if you look at cocoa, it was getting smoked yesterday, and that's probably that type of news. So these tariffs are very important. Like when we saw talks about batteries and things like that from China over to the US and battery materials, we saw things like platinum, palladium, cobalt, zinc, nickel, all these weird obscure things that could be potentially copper, things that are surrounding any kind of battery related items here, really pushing back to the upside here, or at least stopping their descent lower. And you see that in the silver market where we've got this nice hook low, and I'll get into that one in a second. So from the earnings front, because I want to still stick with the economy and everything else, because that's the framework that I have. I always build out the global economy, what's happening, then you hone into the United States, then you hone into what impacts the key commodity that you are, the drivers, the technicals, and things like that. And then as the global economy changes, it adjusts the United States, and then the supply-demand picture often changes for your key commodity, and the technicals will front-run that because the global economy dictates where many of these commodities go. Copper's not a product that's only used in the United States. It's a global product, and that's why we see reflationary environment in most of the global economy, except the stagflationary environment in the United States. And that's why your copper market was the leader on the commodities, but that's getting off topic here. So while we do remain at all-time highs in the US equities, it is important to note that things can shift quickly. So at the end of the month, we're gonna have that deadline for the August 1st tariff approaching. The markets are not pricing in any kind of potential impact from that, so they could be caught off guard on those types of things. A lot of times when markets are looking one way, it's important to look the other way as well. That's why you want to look at put options in the S&P, the volatility and things like that. Not a recommendation, just an observation. Just keep that on your radar. You go into any kind of concert, you go to a party, what's the first thing you want to do? You want to identify the exits and things like that, and then identify the bar to get your drink. So looking at the economic indicators that could come out as well, you do have the jobs report. That's going to continue to show signs of deterioration. See if you get the tariffs to the hard stance on that, you get the jobs deteriorating, then you got a Fed meeting. Well, that upcoming Federal Reserve decision, Fed Chairman Jerome Powell is expected to keep rates on hold. So another disappointment from there, and that's where you get the rug pull on the market. So just be always aware of what could derail whatever market you're particularly in. So looking at the economic data coming out, we do have housing starts, building permits for June. They're expected at 7:30 a.m. Central Time, followed by University of Michigan sentiment for July at 9 a.m. But the University of Michigan sentiment's kind of been trash in my opinion recently. Not Michigan, it's just the data is not moving the markets like it once was, and I think that the credibility of it has really come down, but again, that's my opinion. So let's take a look at the metals, the energies, the broader markets. So the 10-year treasury yield's really coming down 4.44%. That's down about 2 basis points here, and that's really had a wide range the last few days. We're getting close to that 4.5 that tends to be a peak. We start to move our way down, but what you should note on the charts is a series of lower highs. That's why a lot of clients working with me are looking at October call spreads on the 10-year treasuries. Inexpensive, good risk to reward payout in my opinion here, and kind of a slow mover in the market. So you're not going to see a lot of volatility with that. That's kind of a back burner type positions. You got the volatility index coming off a bit. August is the front month here, sitting at 1926. What you'll note is that as that July came up for expiration, can't get that out. It was sliding the whole time here because a lot of these worries were just fading away as the contract expires. And what happens is August resets at a much higher level here because you've got so much time for things to be, for the cage to be rattled and everything else. So I won't look to jump in at those higher levels. I'd rather look the other direction at S&P 500 put options. So you want to use those things as kind of teeter-totters for risk management positions as well. Something to note, dollar index, big, huge move up up yesterday, kind of went back to neutral trend from this bearish trend here, and now we're sliding back lower. So is that another just lower high on the charts followed by what could be another lower low? We'll have to wait and see how that dials out. We talked about the euro currency bouncing off of support, pushing on up here, and most of the foreign currencies across the board are all heading a bit higher. So you do have the crude oil market, which that was one a lot of people missed here and have been really missing back and forth trading. And I think that oil, you know, it kind of lost its spotlight once the US Iran Israel thing kind of faded away. But if you keep a deep dive into a lot of the developments that are going on in the Middle East, we've seen tankers being struck, we've seen tankers being sunk, we've seen continued conflict in that type of region, but these are headlines that are not grabbing way, at least in Western media here. And then if you look at oil prices, just measure it technically, we came down to the support level, now we're bouncing higher, and what you'll see on the charts is if you connect that low from that washout, call it in the mid 50s where we had a double bottom there, we pushed on up, we shot up to the upside, we tested that support, now we're pushing on up. You can see there's a trend line there where it's a series of higher lows. So WTI is something that has gone bullish trend here on the markets. And I'm not saying that oil is going 80, 90, 100 bucks. What I'm saying is that if you draw a fib retracement, it's the 68 to 72 area, which it looks like market kind of stalls there, starts weighing in. You see the supply glut stories come along and prices come back down here. So we also do have news of a new Russian sanctions package by the European Union, so that'll push that up as well. Now, something to note here is that sugar, a lot of people, I talked about sugar where it was breaking out, looked like it was going to break out of this pennant formation. You saw President Donald Trump, he reached out to some of the beverage providers here, talking about replacing some of those nasty products that are in there and taking it back to the all natural. When you go over to Mexico, you get that sugar cane in your Pepsi, in your Coca-Cola, and things like that. So we're seeing a nice 2-day breakout on the charts. Many of you added call spreads, many of you added futures on top of that, and sugar also tends to follow loosely, not strongly correlated, but sometimes you'll see that in the crude oil market, in the corn market, things like that. Now into the silver market, silver prices, they are accelerating up about 1% here. And sorry to wait so long to get into it here. After reaching that 14-year high, coming close, testing that upward trend line. So we'll see if we get close to that. Is it just a tweezer top, or are we going to break out and hit that 40 level, which I'm kind of leaning on that camp. So the technical hook low that we see, and I outlined that in the chart pack, has it was where many people I saw add in there, and a lot of people I'm noticing are now front running the support resistance levels that I'm identifying here. Now silver does have that persistent supply deficit here that continues to grow, which is entering its 5th consecutive year. Industrial demand, particularly in the solar sector, is outpacing mine production. Now, it's not to say that the silver isn't in the ground. It's just to say that mines are just, they face a lot of headwinds. They face everything from regulatory pressures. They face problems with rising labor costs, rising inflation from fuel, rising electricity problems. You see rolling blackout. We were tracking Eskom on Twitter in a real-time alert to see if they were having power outages in South Africa, and that's how we were front-running the moves in the platinum market for a while. You'd see, hey, we have another rolling blackout, or we have a blackout scheduled. Well, guess what? Platinum futures would move just shortly after that tweet would come out. So that's something that happened in the past here, and we'll have to continue to identify, see if we could exploit any of these different things going forward. But there's also a lot of talk about physical tightness, and I want to tell you something is that the physical tightness is not in the United States, okay? And a lot of people have this thing that they've got to run out, and they think that it's the end of the world when it comes to silver and physical side. As you look at coin dealers and bullion dealers, as the price moved up and we finally saw these like 30s getting breached, a lot of people that had held from those levels or bought at lower levels had offloaded some of that silver there. because of the fact they see other opportunities in other markets, particularly the crypto space. They have the ability to re-own the silver, just like a farmer sells his grain off to the elevator. He'll call me up and he'll go, hey, Phil, I want to re-own that corn back on the board or those beans. And what he'll do is he'll buy the futures contracts here because he wants to take a speculative position to the upside. That's what people were doing in the silver market. So if you talk to the coin dealers, everything else, they have quite a bit of inventory. Now the COMEX, a lot of people will talk about that. Where's their inventories? Well, they're near record highs as well, because you get the shipments out of the LME come across to the United States because of the fact they want to exploit the tariffs, things that we saw in the copper market that just unfolded here. So you go to the LME, the borrowing costs now have surged dramatically to historically high levels here, and it points to constraints on the supply over there, because all that supply that's held on the LME is basically going to be locked up or have claims against it by viable claims against it, not just a contract against it that'll be offset in the future. These are rotating, consistent ones because of the fact these are ETFs that need to maintain that backbone in there. 99.99% of all the clients that I deal with, and we run mass amounts of metals, they don't care about the actual, they care about the underlying direction of the metal, but they don't care about ever physically, tangibly taking hold of it, because they be then tying up all their capital into it, and they lose the benefits of the futures, which is having just the flexibility of getting in, getting out, and also having just a bit of margin laid out for that particular product, so they can easily get out, lock in their gains, and move on. So quite a long video here on the ETF flows, little bit of a cut on the gold on the silver market, but they remain at an elevated level, and the gold silver ratio falling at 86-1. So I kind of want to wrap this up here. You got any questions? You want to open up an account? You want to open up an account over the weekend? Our guys will help you out here over there. Ezra and Ryan, those guys are great. They love to work with you, and they'll handle anything you guys need here. So remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.